Good morning, everyone. It is July 23rd, half an hour before the market's going to open. Yesterday, we were expecting mostly a chop sideways. We said that if we did not bounce at least above that EMA 8, then we were going to, I'm sharing the wrong screen, I think. Let me see. Sorry about that. Let's go. There we go. All right, so we said that if we were going to bounce above that EMA 8, then we would consider that significant. We didn't. We stopped before, just a little below the EMA 8. So today we're going to be looking for the same thing. However, we're probably going to chop sideways. The reason why I say that is because number one, there's no major catalyst. But number two, we've got earnings today. So that is a catalyst. But even so, tomorrow, I'm not going unless there's something hugely wild about the earnings, we're probably still going to chop sideways because we have some really important data coming up on Thursday and especially Friday. And if you're a large institution, you don't want to blow all your money or all your cash early in the week when you have major announcements and major reports coming out later in the week. So you're going to save the bulk of your money until all those big reports are over. You might put some to work before that because there are significant reports coming out today, tomorrow, and Thursday. But for the most part, you're going to save most of your capital for that big PCE report on Friday. So before we look at the futures, I would just want to check out our volume. So right here, we can see that the days that we went down, we had normal or significant volume. We were above that moving average. Of course, the moving average is very low compared to just a few months ago, but it was the first time where we had consistent days above the moving average. And then you see that yesterday on the bounce recovery, it was lower volume. So right now, I am not trusting this bounce because one, we didn't make it above the EMA 8, and two, it happened on lower volume. Now, because of what I said about institutions wanting to preserve their cash for Friday, we're probably going to see similar levels of volume throughout the rest of this week. Again, unless there's something huge and unexpected, like earnings are super, super good or earnings are extremely terrible on the larger cap, especially the FANG stocks. And the reports, if the reports come in wildly off of the expectations. So let's see how our futures are. Let's see if we support. Well, so far we can see this pre-market line is basically right where the close was yesterday. So we're not going to expect too much at the very least of the SPY futures. But let's take a look at anyways. We've got the S&P down 2 points, which is basically zero. Same with Dow, zero. The only one that is somewhat significant is the NASDAQ. That is currently down about 20 basis points. So random. There's a slight negative bias, but for the most part, random. So that is supporting our idea that most likely we're going to chop sideways. Now, there is a very narrow range for it to chop sideways. That EMA 8 and EMA 20 are very close to each other. So we're not going to hold it to the moving averages for the rest of this week. We are going to hold it to these purple lines, 550, 560. So for the rest of the week, if we don't break these two lines, then it's not a significant movement. It is just a chop sideways. And those lines are not chosen at random. These were lines that were drawn at least a week ago, where we actually, not a week ago, it was drawn on this day, where we said, oh, we're not going to break above that 565. And it was true. We came all the way in, and then we drew these lines, the 560, the 565, and the 540. And the following day, we added the 550 and the 545 because they were significant levels inside of this box. So you can see that we are reacting to expected levels. Everything is nice and orderly. Everything is as expected in the market. So really, we just expect it to chop sideways for the rest of the week unless we get some wildly unexpected results from earnings or from the reports. And then Friday is a roll of the dice because either we really like what happened throughout the week or we really don't like what happened throughout the week, and then we can get really directional because now we can release all of our buying power. So let's take a look at some of the earnings that happened last night to see if that might have any influence today. I have a feeling I don't think any of the significant ones happen until after today's trading session. So let's take a earnings. Oh, they updated it. Okay. Well, never mind. I thought we could see the today or yesterday's aftermarket or today's pre-market, but so far doesn't look like well, I could do. Well, I can't sort both of them at the same time. Okay, so never mind. Let's just take a look at what is coming up. I think it's easier for me to look at it from FinViz. So we'll do today aftermarket. We got IBM. That's going to be significant. No, that's today aftermarket. Google and Tesla and Visa, all of these are going to be huge. Texas Instruments, that's going to be pretty big as well. That's going to give us more color into the semiconductors. We have had a couple of semiconductors report already, and mixed bag, mostly positive, but a little bit of a mixed bag. So it's going to be very important. Google and Tesla, especially, they're highly, highly followed, and large market cap, especially Google, is huge. It's one of the top three. So we're really going to want to watch those Google earnings because they will have a big influence on how we look tomorrow. But Google by itself, given all of the other stuff that is happening this week, probably isn't going to choose the direction of the markets. It would have to be Google plus something else that in the same direction as Google. So, but we want to be careful, especially with tech stocks. So if you have any tech positions, you may consider hedging them or getting out of them because I don't know. I don't have a good sense of what Google might do. It's probably going to be positive, but again, I haven't done any research or looked into it, so that's just a random guess. I just so don't read too much into that. But if you have any tech related stocks, I would be careful. To today, you have today's session to position yourself and protect yourself for tomorrow's earnings. So let's take a look at our. Oh, well, probably should have started with bonds. Just look at. We haven't looked at our dollar in a while. Let's take a look at a dollar. Dollar looking like it found a little bit of a bottom and bounced. It broke above that MA 200. Now, all of these moving averages are not relevant to the dollar, but the 200-day moving average is. So we want to see if this moves up and continues to go up when we have a entire bar above that MA 200. If we get that for a couple of days, then we'll be much more comfortable about this bouncing upwards. And if it does, that's going to put pressure on stocks. Not a whole lot of pressure, but some pressure on stocks. If we look at the bonds had a big downward day yesterday. It started out gapping up, but then came all the way down below the previous day and into this purple line right here. Looks like we're bouncing a little bit. So we've got a lot of chop. There's a lot of choppy trading inside the TLT. But if we get similar action as yesterday and we trade down, then we will be below this purple line. And then most likely we will at least maybe very choppy, but we may come down to this purple line right here. And that wouldn't be good for stocks either. So let's look at our VIX. VIX, we sold off on the VIX, so we did not continue, and we're expecting choppy movement sideways for the rest of the week. So we're probably going to stay around these levels for the rest of the week. So unless you want it to hedge against movement in the markets, then that example trade we did on VIX as a hedge. You should probably close it. Actually, something better to hedge if you want to is probably you want to hedge specifically tech. Now, VIX is the S&P. It's the combination of QQQ and Dow Jones, and those can be different, as we saw in the last couple of weeks, where they're actually moving in opposite directions of each other. So S&P is sandwiched in between. It's going to be a lot more likely that it moves sideways and chops. So if you want to hedge something, the best thing to hedge would be something specifically in tech. So you could hedge QQQ, you could hedge XLK or SMH, or you could hedge, say, what was I thinking? You could hedge the volatility of specifically the QQQ. So the VNX, nope, VXN. There we go. NASDAQ volatility. Okay, we could hedge NASDAQ volatility. You can see that that came down a lot more significantly than the VIX because the NASDAQ was up very significantly yesterday. So VXN is down, but if we don't get good earnings from Google, for example, VXN will probably shoot way up, or the semiconductors start doing very poorly, then VXN would shoot way up. We're not at extremes. It could shoot up at the very least to this, match these highs, or maybe even up here if things are really bad. So consider that if you want to hedge something, it's probably better to switch over to a NASDAQ or tech specific hedge. Let's take a look at our, well, VVIX is not going to be relevant because it doesn't update yet. We'll take a look at our sectors because we already know about our reports coming up. Yeah, nothing there. So let's just take a quick look at our sectors and see if anything is significant there. Our momentum levels. We haven't looked at momentum over here in a little while. So let's take a look at our overall market. And that's not the overall market. We've got 68% above the 50-day moving average, 65% above the 200-day moving average. So this is looking much, much, much healthier than what we had before. So last month, we were looking at 38% and 50%. And we're saying this is looking really bad because if this slips below 50, then that's the definition of a bear market. We didn't quite get there. We got close, but we didn't quite get there. What saved the day was actually that pullback. I know that sounds weird that the pullback would save the day, because if you say, hey, the pullback or mean reversion, that would actually, we would expect that everything to come down. But what happened was that the mean reversion was mostly in the FANG stocks, and then the blue chip stocks came up. So the number of stocks, not the overall performance, but the number of stocks was moved upwards because we had a small number of stocks moving down and a large number of stocks moving up, and that corrected this disparity right here. So we're actually looking in much better shape than we were. So this mean reversion is already helping the markets look a lot healthier. Doesn't mean that we're done, not necessarily. This SPY, again, we want to break above that EMA 8. And we said for this week, we want to see a back above that 560 if we are going to feel good about continued upside movement. Otherwise, 560 to 550, we're going to consider that choppy and non-directional. And then I guess if we hit 550, then we're making pretty good progress towards that MA50, actually. So maybe 555 to 560, we would consider that very just choppy movement. But if we do make it down to 550, we're not going to get super excited because we're backstopped at 545 and that MA50. Is that right? What's this? 540 and the MA50. And then from there, we would reevaluate to see if there's potential move downwards. But just from momentum levels, that would be the pullback. That would be an official pullback. So this is so far just a mean reversion. That would be an official pullback, and that would be already correcting all of the weird, unhealthy stuff that we saw in the momentum of the markets. So that would be enough. If we bounce from there, we could be very comfortable that we might continue a bullish trend. So we'll see. We'll see what happens. We'll see what plays out this week. But again, probably not this week. We're probably going to chop this week, and then maybe we'll see something on Friday or next week. And then we'll just take a look at the major indices. 69.74 looking great. Russell 2000, 77, 68, great. Dow Jones 60, 73. Yeah, everything is just looking much, much, much better. And then, so just for educational purposes, we don't need to do it. We already got the information we needed, but just so you can see the difference between now the SPY and the RSP, it'll look much healthier. And what we may even see, given on how big these numbers are, is that the RSP actually looks much better or healthier than the S&P right now. So if I look at the RSP, you can see we made a new high over here, and we just pulled back to the EMA 8. And it looks like potentially we bounce off of that EMA 8. So that is looking very good. So new high bouncing off of EMA 8. What does this SPY look like? New high trading down below the EMA 20 and still below the EMA 8. So the RSP is looking a little bit better than the SPY. And then we can look at the QQQ. QQQ new high actually wasn't even that recent. It was about a couple weeks ago, pulling back almost all the way to the MA50 and then bouncing up below the EMA 20 and EMA 8. And if I look at the QQ equal weighted, then that was new high, much more recent new high, pulled back to the MA50, and then bouncing up to the EMA 20. So the QQQ and the equal weighted QQQ look very similar to each other. It's just that we made a new high more recently in the equal weighted one. So again, the QQQ is just looking a tiny bit worse than the equal weighted, but they pretty much look the same. So the difference is more stark in the S&P 500. So our momentum is looking good. If we look at our 90-day highs and 90-day lows, we were at 175 and 10. So it looks like we're bouncing and swinging up just based on yesterday. But again, unless these hit extreme numbers, then we're not really trending. Or sorry, let me say that again. Unless we see these numbers steadily rise or steadily fall, we're not really trending. And if we just kind of hang out at 175, 200, that's not going to be significant. That's going to indicate sideways choppy movement. So the numbers themselves are not telling us anything different than what we've already seen. That most likely we're chopping sideways. So everything is supporting this thesis of sideways chops so far. We could get different data as we trade today, but that's what we're seeing so far. And then looking at the sectors is not going to be that meaningful in a choppy sideways market. If everything chops, if we just see that NASDAQ or the tech ones chop back and forth, then we could start looking at the other sectors to see if we have strength or weakness in any of them. But yesterday we already went through that in the post market, and almost everything was chopping sideways. So it really does look like a lot of chop. We're going to watch this EMA 8 very carefully, but also the 550 and the 560 levels. If we don't break through those, we're just not going to get too excited, and we're just going to remain neutral in our portfolios. We're going to take this fixed hedge off. Let me just go ahead and do that now. Let's just close this trade on paper. And then for us, for the portfolios that we've been talking about, doing that basically neutralizes our portfolio, and that is appropriate for chopping sideways. Okay, I can't think of anything else to look at. So I think we have a pretty good idea of what to do and what to expect. So I'll leave you guys to prepare for a market open, and I will see you in the post-market review.